Hey everybody, Boris Hassberg. Welcome to our weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for August 20th to August 24th, 2018. And the story in the calm dollar land is very much the mirror image of the majors. It's basically risk on, risk off flows. With the end of the week, really seeing some risk on flows and the calm dollars starting to pick up. And as usual, CAD is the idiosyncratic trade to the upside or dollar CAD to the downside. In our case, as the data out of Canada surprises back up to the upside. And the divergence between Aussie and Kiwi as far as monetary policy still continues to persist, although the price levels are starting to even out a little bit as the Aussie-Kiwi cross comes in a little bit. Levels essentially have kind of found a near-term bottom with 72 as support in Aussie, 74 now is the resistance. This is now former support that becomes current resistance. And that's very much the story in the calm dollar land as it is in the majors land. Same story with Kiwi. 67 was that big support that we broke after the RBNZ meet, and now that becomes the resistance. 65 remains the key support in that area. And dollar CAD really probed its way down to the 130 level and looks like it's ready to possibly break it this week if we get any kind of positive data out of that. But still right now, it's a 130, 132 trade. But clearly with a bias for more CAD positive news as we go forward. The calendar also relatively quiet, not much on the set. We do have New Zealand retail sales and Canadian retail sales, which are basically, and also the trade balance out of New Zealand, which is basically the only drivers of trade this week in the calm dollar land. We have a little bit of the RBA August meeting minutes, but since we already had the Governor Lowe talk, with a relatively hawkish bias, we assume they're going to essentially reaffirm the hawkish bias. That may help the Aussie a little bit, but ultimately, really, the whole trade in the calm dollar land is a risk-on, risk-off trade, which means it's all going to be driven in the grand big scheme of things by what happens between the U.S. and China negotiators. At this point, I guess the bias is to the upside in the sense that the market is hoping there's some positive news. If there's negative news on that front, we could see a return right back to the lows, especially if it's really negative news and the Trump administration hardens its position, and so do the Chinese. Let's take a look at the charts here and just see how everything sets up on the charts. So we'll start with the Aussie, just because. And you can see a very nice UE turn here as 72 clearly makes a very clear support. It's clearly big risk on trade into the weekend. We close out on the highs of the day. Likely to have a little bit of continuation. The 20 period moving average comes in at around, I guess, 73.50 or so, 73.75. But that whole 73.50, 74 area, that was the big support. That now becomes the key resistance. So anything beyond that, I would say anything beyond 74.50 is going to be met with some massive selling. Unless we have again, the critical thing is if the market completely changes its viewpoint on trade negotiations, where everything goes incredibly positive. It would be difficult to imagine that happening this week. This would be a multi-week kind of a strategy, but the only way I can see this whole trade really turning around in a V-shaped form is if the negotiations between China and U.S. actually result in lower tariffs and better, kind of more friction-free trade. That would be highly positive, and the market would view it as such. In the meantime, I think you're going to see some incremental steps that could be mildly positive, that could push us all the way up to the 74s, and that's about it as far as we go. Kiwi, same kind of a story. Had a nice big recovery, actually, back through the 66s. 67 is going to be a very tough area to overcome, especially given the RBNZ's negative slant. So same kind of a story. We have maybe another 50 to 70 points of upside to the risk. And right now, any kind of a slide back is held back by the 65 support area. It's actually 65.50 that's the true support area in Kiwi. 65 would really be fresh lows. And that's pretty much where that stands. The big story, of course, was CADI, which had very hot CPI today, which puts the Bank of Canada as the only other major G7 central bank that is really in a tightening mode. I mean, Bank of England just did it for show, but Bank of Canada actually is in a tightening mode, especially if we're in a situation where the economy is really not suffering nearly as badly as everybody thinks from all of this cross-trade tension talk. Oil holds bid in the mid 60s for for CADI, and the economy is just not as resource dependent as it used to be. So all of this combines into a situation where the Bank of Canada may have to consider another rate hike, excuse me, before the end of the year. That's very bullish Canadian dollar, and therefore dollar CAD comes in here and could possibly probe the 130 level. We're 60 points away from 130, and any kind of positive risk on really will push us right through this level for a retest of the 130s. That's pretty much how the COM dollars shape up. It's CADI to the lead, with Aussie Kiwi to follow, and all eyes on U.S.-China trade negotiations to see if we can get any more squeeze out of this risk on trade into next week. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.